This particular segment is going to be a brief description of whole life insurance, which is one of the options that you have besides having the voluntary term life. One of the first questions I often get is what's the difference in whole life versus term insurance? The simple fact is the whole life policy, whatever your premium rate is at the age that you purchase the policy, that remains your premium rate for life. So you lock in that rate. So when I bought a $50,000 whole life policy when I was 35 years old, I paid 35-year-old rates. Now that I'm in my 60s, if I would try to buy that same $50,000 policy, instead of paying $35 a month, which is about what I pay, I'd be paying about $120 a month. So that's the idea of whole life insurance, is that you lock in your premium rate for life for that amount of coverage. Now, a lot of us people use the kind of the idea of the foundation on a house. A whole life policy is my foundation. That's the 50,000 that I want there for life. Uh, so I want it for final expenses. I want it for paying estate taxes if there are any, and some money to leave to my children. When my children were growing up, this was my foundation for life, and I locked it in at the $35 a month level. But I needed a lot more than $50,000 of coverage raising two kids. And that's where I used the voluntary term life insurance. I could buy 250, 500,000 today with inflation, even $1 million policy. And I had that, well, for that 20, 25 years window when I was raising kids and putting them through college. So if something happened to me at that point in time, I wanted my spouse to have the amount of money to do what you needed to do to raise the children. Once they're on their own, and if you decide that the rates get too high as you get older on the term policy, you can drop that policy. If you bought a whole life policy, you have that locked in at the lower rate for life. So that's the whole idea and the difference. Um, the your whole life policy that y'all have available to you is Protective Life. Don't get confused. A Protective Life Insurance Company is owned by Chubb, and a lot of people think of Chubb as being a life insurance company itself. The real fact is Chubb owns about 17 different life insurance companies. They all operate under their own name, which makes it very confusing for all of us. So, in fact, when I was doing this, that became a confusion. Was I going to do a Chubb presentation and a protective presentation? Well, it's actually one policy. You have the protective whole life policy. The coverage is available to you in $5,000 increments from $5,000 to $100,000. You can get any amount you want, and if you're early 20 and you're aggressively, you make a good salary and you want to lock in a large amount, you can do so. I will tell you from doing this for 30 years plus that the average size policy we see is $10,000 to $50,000 unless someone has something specific they want to do it for, or unless they're in their 20s and then $100,000 is still in the teens per month as far as premium. The spouse can purchase up to 100% of what the employee purchases. To cover spouse and children, the employee does have to participate in the plan. Children can go from $5,000 to $25,000 in what's called a child term rider that will attach to either the employee's policy or the spouse's policy. And as I mentioned to you in the other video, it goes to age 26 and it does lock in the child's insurability. We don't see that many child deaths. Thank the Lord that we don't. But what I explain to people, again, because my son went through cancer, I want to use the term rider to guarantee insurability for that child for life insurance in the future. And we have seen everything from the cancer patients, obviously, to things like I've got one little girl who got under the kitchen sink and was able to get into the furniture polish and drank it. So she has a very messed up stomach, and she would be declined life insurance under a regular life insurance policy. With a child term rider, we can guarantee issue her up from $50 to $150,000, and they can't say no when she hits age 26. Your policy also includes a long-term rider benefit on it. And what that simply means is if you were to be diagnosed or your spouse is diagnosed that they need to have long-term care, the policy, you can execute the right to take 4% of the face amount of the coverage uh, per month for 25 months to help pay the long-term care benefits. Basically, you can get your life insurance payment in advance. If I have a $100,000 policy, 4% a month is $4,000 a month. If I have a $50,000 policy, that's going to be $2,000 a month. Um, so that's pretty much a nice rider you have in it if you need it, and you can take care of the long-term care. Again, it's up to it's 4% of your face amount per month for up to 25 months. The employee, again, as I mentioned, must elect coverage for the family to have coverage. When looking at the whole life versus term, think of it in terms of short-term goals, raising children the next 5, 10, 15, 20 years, and long-term goals, who's going to pay your final expenses, who's going to pay your estate taxes, who's going to pay off your mortgage, which hopefully, if you started out young, will be down as far as the principal amount left at that point in time. But in any case, the whole life insurance is available to you. For first-time employees, it has a guarantee issue of up to $100,000 for the employee, and the spouse has a guarantee issue of up to $25,000. The child term rider, $5,000 to $25,000 is guarantee issue as well on all of them. If this is not your first enrollment and you want any of these products, you can still apply for them. We will just have to answer the simple medical questions, and I'd say 95% or more of our people qualify for the amount they want. I did not like the idea of not having open guarantee issue every year. I like that. You can do that on a 50,000 employer company. It's not so easy on a 25 life, 50 life, 500 life company. But as much as I don't like it, from what I've seen and the things I see, I can have someone who comes in, and one of the things a lot of my clients have is the critical illness policy with the heart attack stroke benefit. I can have someone come into meetings 5 different years and they say no. Then all of a sudden they've got this pain in the chest and they're being told by the cardiologist that they're going to need to do something. All of a sudden they walk in and now they want to buy a $100,000 policy. And that affects not only the insurance company, it affects the premiums for everybody else who's been participating for over the years. So I can't blame them on that. But again, we will be happy to work with you on filling out the applications. The questionnaires, at least the medical questionnaires, everything else is done electronically, and we will do everything we can to get you covered on these policies as well. If you have any questions on the whole life insurance, again, you have our number 972-393-8686, and we also have the 800 number for Bay Bridge, which is the administration company for the life insurance products and all the products, and we'll do what we need to help you get enrolled. Again, if you have been doing this before and you want to leave everything the same, I'm told by Mitzi you have 2 options to do that. If you want to log into the system and remind yourself of what you currently have or look at some of the brochures, you can then just click leave everything the same or no change button. Or if you are not interested in going into the system, you do not have to do anything and your benefits will stay exactly like they are. The only exceptions to this is the flexible spending accounts. On the flexible spending account, by IRS law, it goes to 0 every year, but we have already have set up. We work with accrue benefits with your debit card. You will be contacted and offered and asked what you want to do as far as your FSA benefits or dependent daycare benefits for the next year. If you are not already on the flexible spending account, then give us a call and we'll put you in contact with them, or we can actually we'll do it for you on the electronic enrollment system and add you to the flexible spending account as well. Thank you for your time.